Right now, thousands of retirees are paying up to $6,936 a year extra for Medicare. Money many of them don't actually owe anymore. Why? Because of one surcharge with a strange name, and one simple government form that can wipe it out. Most people have never heard of either. If you retired recently, lost a spouse, or your income dropped, this video could put real money back in your pocket. I'll show you exactly how the surcharge works, who's overpaying without knowing it, and the one form that fixes it. Let's go. The surcharge you didn't know you're paying. Here's the situation, straight to the point. Medicare has a surcharge called IRMAA. It stands for Income-Related Monthly Adjustment Amount. Forget the name. Here's what it means in plain English. If your income is above a certain level, Medicare charges you extra, on top of your normal Part B and Part D premiums, every single month. The 2026 thresholds. It kicks in when your income passes $109,000 for a single person, or $218,000 for a married couple filing jointly. And it's not small money. The surcharges are tiered. The more income, the bigger the extra charge. At the first tier, it's over $1,000 a year per person. At the top tier, the maximum surcharge in 2026 is $6,936 per person per year. That's an extra $5,844 for Part B and $1,092 for Part D. Now here's the first thing that catches people. This is a cliff, not a slope. If your income goes over the line by even $1, you pay the entire surcharge for that tier. $1 over $109,000, and you owe the full extra amount. There's no partial charge, no easing in. Over the line is over the line. About 8% of people on Medicare pay this. Maybe that's you. Maybe you looked at your Social Security deposit, saw it was smaller than expected, and never knew why. This is often why. But here's the part that makes this video worth your next 15 minutes. Many people paying IRMAA today shouldn't be, because of a quirk in how it's calculated. That's next. The 2-year trap, why retirees get hit unfairly. This is the core of the whole problem, so listen closely. Medicare doesn't calculate IRMAA using your income today. It uses your tax return from 2 years ago. Your 2026 premiums are based on your 2024 income. Now think about what that means for someone who just retired. Say you worked all of 2024, full salary, maybe a bonus, maybe you cashed out some vacation time on the way out. Then you retired in 2025. Your income today might be a fraction of what it was, but Medicare looks at that 2024 return, the big income year, and says, high earner, pay the surcharge. You're retired, living on Social Security and savings, and you're being charged extra premiums as if you were still pulling a full salary. Here's a real-world example of how bad it gets. Someone retires in mid-2025. Their 2024 return shows $340,000, final salary, bonus, everything. That puts them in a high IRMAA tier, paying $527.50 a month just for Part B. That's $324 more than the standard premium, every month, for income they no longer have. This isn't rare. It happens to a huge share of new retirees, because almost everyone's income drops when they stop working. But the 2-year lookback doesn't know that yet. And here's what most people do. Nothing. They assume it's automatic, it's the government, nothing can be done, and they just pay it. For a year. Sometimes 2. They're wrong. There's a fix, an official one, and it works in weeks, not years. That's the next segment, and it's the most valuable 5 minutes of this video. Form SSA-44, the fix. The fix is a form. One form, 4 pages, completely free. It's called Form SSA-44. Medicare Income-Related Monthly Adjustment Amount. Life-changing event. Here's what it does. It tells Social Security, my income dropped because of a major life event. Stop judging me by my old tax return. Use my income now. If they approve it, your premium is recalculated based on your current situation. And if you already overpaid this year, they refund the difference. But, and this is crucial, you can't file it just because your income went down. The event that caused the drop has to be on Social Security's official list. There are 8 qualifying life-changing events, and the list is closed. Here they are. 1. You stopped working. Retirement. This is the big one, the most common reason by far. 2. You reduced your work. Cut back your hours, went part-time, semi-retired. 3. Death of a spouse. 4. Marriage. 5. Divorce or annulment. 6. You lost income-producing property through disaster, fraud, or similar events beyond your control. 7. you lost a pension. Your plan was terminated or reduced. 8. An employer settlement, like a payout from an employer's bankruptcy or closure that distorted 1 year's income. Notice what's on that list and what's not. A Roth conversion you chose to do? Doesn't qualify. Selling a property or stocks at a big gain? Doesn't qualify. You chose to sell. A bad market year that cut your dividends? Doesn't qualify. The rule of thumb. Things that happen to you, retiring, losing a spouse, qualify. Financial moves you chose to make don't. One more requirement. The income drop has to be significant, meaning big enough to actually move you into a lower tier. If your income falls from $135,000 to $130,000, you're still in the same bracket, so there's nothing to recalculate. If it falls from $135,000 to $90,000, you drop below the threshold entirely, and the appeal saves you over $1,100 a year on Part B alone. So the test is simple. Ask yourself 2 questions. Did one of those 8 events happen to me? And did my income drop enough to land in a lower bracket? Yes to both. You should be filing this form right now. How to file step by step. Let's make this practical. Here's exactly how to file, start to finish. Step 1. Get the form. Download SSA-44 free from sa.gov or pick one up at any Social Security office. Never pay anyone for this form. It's free, and filing it yourself is genuinely doable. Step 2. Gather your proof. You need to document 2 things: that the event happened and what your income looks like now. For retirement, that's a letter from your employer or documentation showing your last day. For the death of a spouse, the death certificate. For divorce, the decree. Then for income, recent pay stubs if any, Social Security statements, pension statements, whatever shows your real current income. On the form, you'll estimate your income for this year. Step 3. Submit it. Mail it, drop it off, or hand it in at your local Social Security office. Keep copies of absolutely everything, every page, every document. Step 4. Wait, but know the timeline. Routine cases typically take 30 to 60 days. Complicated ones, self-employment income, unusual events, can take 90 or more. If Social Security needs more documentation, they'll send a request, and you'll usually have 30 days to respond, so open your mail and respond fast. Step 5. The payoff. If approved, your new lower premium applies, and this is the part people love. The excess you already paid comes back to you. 3 practical tips from how this plays out in real life. First, if you get denied and believe you're right, the denial letter includes instructions for a formal hearing before an administrative law judge. You have appeal rights beyond the first decision. Second, you can file more than once in your lifetime. Life keeps happening. If a qualifying event hits you again in 5 years, you can file again. Third, keep paying your current bill while your case is pending. Don't stop payments waiting for a decision. You'll get the difference refunded if you win, but a missed payment creates its own problems. Do this check even if you're not appealing. Now, even if none of those 8 events happen to you, give me 3 more minutes. Because there are 2 things everyone on Medicare should understand about this surcharge. First, the automatic catch-up. If your income dropped for a reason that doesn't qualify, say you just have less investment income now, you don't get to appeal, but the system does eventually catch up on its own. The 2-year lookback rolls forward every year. Income dropped in 2025? Your surcharge adjusts automatically in 2027 when they review your 2025 return. So a non-qualifying drop means waiting, not paying forever. Second, watch your mail in the fall. Every year, usually in November, Social Security mails IRMAA determination notices for the coming year. Most people glance at it and file it away. Don't. That letter tells you which tax year they used and what you'll pay. If the tax year is wrong, your filing status is wrong, or you've had a qualifying event. That letter is your cue to act. And note, for formal appeals, there's generally a window of about 60 days from the notice date, so the letter starts a clock. A new initial determination via SSA-44 for a life-changing event is more flexible, but the sooner you act, the sooner you stop overpaying. And a quick word on avoiding IRMAA in the first place for those doing retirement planning. Because it's a cliff, people near a threshold sometimes trip over it with one financial move. A large IRA withdrawal, a Roth conversion, capital gains, all of that counts in the income Medicare looks at, and even tax-exempt municipal bond interest gets added back in. If you're anywhere near a bracket line, that's a conversation worth having with a tax professional before you make the move, not after. Scam warning plus recap, a warning before we wrap. because this topic attracts predators. The SSA-44 is free, and filing it is free. Nobody legitimate will cold call you offering to eliminate your Medicare surcharge for a fee, and nobody from Social Security calls demanding your bank details to process your refund. If your appeal is approved, the refund comes through your normal benefit channels. No one needs your card number over the phone. If someone contacts you like that, hang up. When in doubt, call Social Security yourself at their official number 1-800-772-1213. Let's recap what you now know that most retirees don't. Medicare charges higher income beneficiaries a surcharge called IRMAA, starting above $109,000 single or $218,000 joint, running up to almost $7,000 a year per person. It's based on your tax return from 2 years ago, which is exactly why so many new retirees get overcharged. They're judged on their old working income. The fix is Form SSA-44. If one of 8 life-changing events, most commonly retirement, dropped your income into a lower bracket, you can file it, get your premium recalculated in roughly 30 to 60 days, and get refunded what you overpaid. And every fall, read that November letter instead of filing it away. If even one person watching files this form and gets their money back, this video did its job. So if you know someone who retired in the last 2 years, send them this. It might be worth $1,000 or more to them. One honest note, this is general education, not personal tax, legal, or financial advice. IRMAA rules have real nuance. Brackets change yearly, and your situation is your own. Confirm the details at SSA.gov or with a professional before acting. Hit like if this was useful. It genuinely helps more retirees find it. And subscribe. Next time, I'm covering the letters some Medicare Advantage members will get this fall, telling them their plan is disappearing, and exactly what to do about it. Take care of yourself, take care of your money, and I'll see you in the next one.